Thank you so much for being here. It's just awesome to see Consensus in Miami for the first time, and it's packed. Everyone is here. It's just beautiful. And I want to take out 15 minutes of your time, and I want to talk a little bit about the Agentic AI wave and how that connects with venture capital. And I want to talk too much about myself, but I've been in this industry for too long. We raised a couple different VC funds, and we deployed into both Web3 companies as well as AI companies. Currently residing in Singapore, so it took me about 30 hours to come here, but it's absolutely worth it. Now, AI has obviously been a tremendous piece of venture capital funding. About 61% of global VC money runs into the AI world, especially Agentic AI, which is probably a buzzword a lot of people are going to be talking about at the conference, is already $6 billion. And you can see that quite nicely on some of the next charts of how that really increases. Now, AI came basically in 3 waves. The first one was predictive AI. Sees pattern in historical data, and it was already a breakthrough. The generative AI part, it creates content on demand, right? That's what makes Canva obsolete and a bunch of other great companies, because you can literally do it on demand instantly at almost no cost. And then you have Agentic AI. That's the current wave that everybody talks about. That's really when you have goal-directed actions, and agents alone or multiple agents work together to achieve a single goal. Especially here, you can see from 2023 to 2024 to 2025 how the funding into the Agentic AI world increases. And of course, Web3 and crypto also has a tremendous input in that, because more and more AI and Web3 get merged in order to solve certain problems. But why is it important right now? It's because effectively unit economics have changed. You now have outcome-based pricing that replaces per-seat SaaS, and I think that's been a tremendous shift. AI agents are basically now becoming digital employees, and almost majority of organizations expect 100% or ROI that's greater than 100% almost instantly. And top companies already achieve an ROI of over 500% in the first 18 months of implementation. Now, there's a couple of lenses looking at it from more of a capital perspective. Like, what do you really want to look at when you're investing in these type of companies? Because a lot of companies that claim to be AI first are not necessarily AI first and just using certain wrappers or built-in technology. Because, let's be real, the more buzzwords you can put in a pitch deck, typically, the more likely you get venture funding, or at least that's what a lot of people think. Now, you have the first point. That's really how deep does this whole thing go, right? How many decision nodes, meaning how many agents can you have, and how many of them can be handled fully without human override. The second part is infrastructure. And I think infrastructure is a core, because most of the wrappers, most of the projects that come, they use existing infrastructure. They don't build their own infrastructure. But they need to figure out how they can build that on trust. How does it have memory? How does it have context? And how does that effectively scale? And how are these decisions being made? Integration is a very, very important factor, especially if you're talking about more and more institutionals coming into the space. How easy is it for a large company to implement your solution? How long does it take? How much money does it cost? And what is the ROI that a company of any size can basically expect using your solution? So some of these points are very crucial, because even if you have the best project and it takes years or it's almost impossible to implement, no one's going to buy it, meaning it's hard to invest in such companies. Data flywheel. Data is becoming gold, right, to a big extent. And the question now is, does your AI agents get smarter with usage? Meaning, how many companies, how many people are using what you're doing? Does the AI grow with all the data you put in on a consistent basis? And then the last point, which is a perfect transition to the panel that was here before, is the entire idea about what does the regulators do? Is there clarity? Are they compliant with standards or guidelines? And are they able to be agile enough to adjust to future regulatory adjustments that are coming out, because that will definitely be a topic, and as fast AI is moving, regulatory frameworks will have a lag, but eventually they will catch up. Now, what are some of the risks investing in these type of projects? Only 11% of all AI pilots actually make it to full production. So almost 90% fail. It right now costs about $890,000 of average integration cost per enterprise, especially if you're talking about slightly larger enterprises. We have an AI talent shortage, so about 340,000 people are just not there that we need in order to build these solutions that matter. Now, a lot of companies that we look at, they all send us demos. Very few are able to show the agent live in production, which is very crucial. So we always have to see the agent live in production, not a demo, because that doesn't show us product market fit, that doesn't show us actual implementation. And it's easy to make a great video, but it's harder to actually put it in production. Now, not all bad. There's a lot of great points about this also. We have the data that's eventually going to create the moat. We have outcome-based pricing. There's a lot of efficiency and speed. We have enterprise clients already receiving measurable ROI. Maybe just a quick question to the audience. Anyone runs a company here? Are you guys have implemented Claude Code or any of the AI tools, or are you kind of staying away from it? So there are some here that have already done it, which is amazing, and that's how it's eventually going to work. I mean, our venture capital fund runs entirely on Claude Code, and no one does all the admin stuff anymore. That's a very shallow way of implementing it, but that obviously increases as we have more and more interesting ways of doing that. Now, multi-agent orchestration, you basically create an entire team that has hundreds of employees that are all agents working together, solving different parts of the problem. And you can see that already, if you just go online, there's agent farms being built where like one guy just runs 100 agents doing different things, achieving different tasks, and that's just becoming the norm. And of course, more and more founders are coming out that already have that domain, that have that AI experience, and are not just fully focused on that crypto angle, but actually trying to build something that solves problems and helps enterprises or smaller businesses to figure out how they can scale their operations and have better ROI in their processes. So the question is now where to place your bets. And obviously that's not investment advice, but that's just some of the things that are quite interesting right now where we see the biggest use case of AI agents, which is infrastructure and payments platforms. You have memory and context management layers, a lot of stuff around evaluation and monitoring, which is important for us as a venture capital fund. How can you scale and make sure you have a better way of evaluating projects? You have developer tooling. And that's actually a very interesting piece here because it's been, a couple of years ago, it's been quite expensive to build a software company. You have to have developers, you have to have blockchain architects. They're typically quite expensive, so you have to raise a lot of money to even get started. In today's world, you can build your MVP with almost no money, one person just vibe coding the entire product and go to market and get VC funding to scale it. So the barrier of entry to actually get involved in building your own company has definitely changed a lot, and that's what we see. The vertical layers are more domain-specific agents. You have legal compliance. Some of these tools get in, strong uptrend in healthcare, financial services, all around trading, custody, and many other players here. You have customer service. That's probably the most obvious one. Probably all of you guys have talked to a customer service agent. And coding agent that effectively ship products or updates in real time without anyone overseeing it, just approving. Now, where do you get your deal flow from? I think That really has to change. It's not just about sitting in your desk at home. I think you have to do a lot more as a venture capital fund. You have to go to events. We all hear consensus. You have to figure out how to get your own proprietary data. You have to figure out how you get your deal flow and your due diligence in order, and how can you as a venture capital fund also upscale with technology. Portfolio construction, that kind of depends on how you do it, but for the most part, what we see in the industry right now, a lot of companies and venture funds focus on seed and infrastructure, like seed stage projects, but in infrastructure and orchestration bets. That's typically like where you see the biggest potential gain of a startup, if it kind of covers the entire infrastructure versus a very selective stage. Or Series A projects that get funded more in a vertical agent area, but then you need traction. You have growth. That's really where like the network effects, the platform effects come into play. That's also the pre-IPO deals. That's all the ones that, we talk about Anthropic, OpenAI, all these different players. Diligence, demo the agent. I think that's very, very important. We want to see if it works. We want to have, ideally, ROI data if you already implemented it to a customer, like how helpful is that implementation actually at the end of the day? And how can we stress test it? How can we understand the moat? And what happens if OpenAI starts building the product and the next upgrade is basically your project? So how can we prevent that from happening? What's your real moat here? We think that there's going to be a massive M&A exit consolidation that's going to happen. A lot of smaller players are going to be bought by bigger players in order to gain market share. We probably have some IPOs that are happening, as we can already see. And we also have tokens that are integrated with these AI players that obviously gives investors an opportunity to get liquidity through a token launch, a TGE at some point down the road. The bottom line, in Web3 and AI, the next wave belongs to those who manufacture their own deal flow. What that means is the typical VC game has been always the same. The GPs sit and do the deals with their buddies. Now, AI brings down the barrier of entry. So we'll see innovation coming out of places that we might not have seen before. So you have to be on the ground, you have to meet the founders, you have to understand what they're building, and you have to be aware of what's happening in the industry overall. What's the information, what can disrupt the companies, and how can you use that to your advantage to make selective bets. So for all the founders out there, I'm very excited about this new wave of Agentic AI and Web3. And if you guys are building something in AI, definitely reach out to us and demo your product, build something awesome and exciting. And I wish you all a wonderful rest of your week and enjoy Consensus, enjoy Miami. And then come to the official after party of Consensus on Wednesday. So we'll see you there. Thank you so much, guys.